Dear guests, please welcome and take your seats as we're about to start our next workshop, Gold, South African Rand, and the 2024 Financial Markets Outlook. A quick reminder, online trading involves the risk of losing your funds. Make sure you understand all of the risks involved, exercise caution, and trade with brokers you trust that hold the appropriate license by the FSCA. And now, please welcome me on stage, Terence Hove, Senior Financial Markets Strategist at Exness. Terence, the floor is yours.
Good afternoon, everyone. Thank you for attending this workshop, and I'm hoping that for the 20 minutes that we have together, it's going to be insightful, and hopefully your trading experience is going to be a bit more enlightened, and you'll take at least one or two ideas that will contribute to the success of your trading business. So today we're going to be talking about, I think, three key things around what the financial markets have been. Gold, which is a very popular instrument. By show of hands, how many of us here are trading gold? Yeah, there we go. Pretty much everyone, and the importance of that instrument and as a physical commodity. We'll just talk about where it is right now, and some of the conversations I've had with some of the attendees on how they have struggled with gold, but at the same time, I hope I'll be able to highlight how it's been one of, I think, the best trades for 2024. And I think it will remain to be a very good trade for the rest of 2024. So we'll just have a look at where it has been, where it is now, and what it's going to look like for the rest of the year. And of course, being in South Africa, our South African Rand, what does it mean for you? So gold and the South African Rand actually has a high correlation, and sometimes gold traders are not aware of that. So you might be able to pick up some proxies from the South African Rand, and what that means is, if you look at gold right now, for some of you who have traded this yesterday, or today is Tuesday, right? You would notice that gold has hit an all-time high, 2,450. I think the highest I'd anticipated this year was about 2,100, right? At this rate, we might actually get to 3,000, right? And what is the main driver behind that? And lastly, the financial outlook in terms of what the financial markets are looking at, some of the key drivers of the price action in the year ahead. If you note these down and put asterisks on them, highlight them, I promise you'll be looking for me to say, Terence, it's like you're looking through a crystal ball, which I'm not, but it will certainly help you with the business. So that is the background of the conversation that we're going to be having. As I said, now going into the second half of the year, what has the US Fed done? The interest rate path of the US Fed, the impact on gold, the South African Rand. And this year is an election year, both in South Africa and in the US. That is something that is very important for you to be mindful of, because the elections this year are playing a significant role in financial markets. And it'll be good for you to be prepared when you trade those events, just like you trade non-farm payroll, US non-farm payroll. So when we look at gold, or rather let's look at the financial markets overview for what 2024 has been. There's been a lot of instability, a lot of uncertainty. And whenever there's a lot of instability, uncertainty and volatility, that is when gold does exceedingly well. Why? Gold is still a safe haven asset, which means whenever there's risk And whenever there's uncertainty in the market, when that increases, a lot of investors, a lot of traders pile their money into gold. One of the key factors is the Middle East conflict that literally escalated rapidly. And you'd have noticed one of the reasons that gold has hit the all-time high is the headline that we got out coming out of the weekend when the Iranian president's helicopter crashed. That is a big event in the chain of events that have been happening. If you've been following the geopolitics and the escalation that has been happening there, you will note that that helicopter crash is an igniting factor for gold to remain elevated. And on the back, you'd think the South African rand would sell off. Why would the South African rand sell off? Because it's an emerging market currency. So emerging market currencies are seen to be more risky during times of heightened uncertainty. But it's done well. Why has it done well? The next point, which is the US interest rate path. My analysis and view of gold for 2,100 price level for 2024 was driven by what a lot of the market participants thought was going to happen by this time of the year, which is interest rate cuts from the US Fed. If you trade gold or any other currency pair against the US dollar, you need to always be mindful of the US interest rate path. That's sort of like, you know, if you're not aware of what's going on there, you're shooting in the dark when you trade. And by this time of the year, inflation in the US was expected to have come down, right? So you'll see that interest rates, the correlation to the dollar index and inflation, the US inflation, they all have a high correlation. Whenever inflation is high, the US Fed increases interest rates so that they lower what? The inflation. That's what the relationship is. Gold does not pay interest. What that means is you buy gold and you keep it in your safe. Hopefully you don't move around with it. And because of that, it's a non-interest yielding instrument. That is why when inflation figures come out, gold is affected significantly because now the outlook is, what is the US Fed going to do about interest rates into the future? That is what you always need to be mindful of. And what are we talking about when we say inflation? It will be the next point. But prior to that, this time of the year, inflation was expected to be coming lower in the US, which has not happened. Because inflation has remained elevated, interest rates in the US have remained elevated. Because interest rates have remained elevated, the dollar, US dollar, has done exceedingly well. So you will see that measured through the dollar index, which is a basket of currency traded against the US dollar, and the euro making up a significant percentage of that. So the dollar has done very well because interest rates have remained elevated. Inflation is coming down, but it's not coming down as fast as the US Fed thought it would be. That is where the key story is. So we are in May right now, and call it an anomaly that is going to come up in June, where the US Fed will give you an interest rate decision on June the 12th, if I remember correctly, so that's not too long from now. And then soon after that, July, there's another US interest rate decision. So by June, July, interest rates were expected to have been coming lower. That is why gold coming into 2024 already had a favorable outlook before we look at the geopolitical risks that have escalated, right? But that's not the case. So 2024 as a trader has been, rather unpredictable. But it's predictable in that the interest rates have remained high because inflation remains high. Now, when we look at the second quarter that we're going into, what are some of those things that you'll need to consider? First of all, the instability is still going to remain. Hence, I mentioned that helicopter crash. That's a very key event geopolitical-wise that you need to follow. Any headline that comes out of that region right now is really going to move the market in terms of who next is going to be the president. Are they an extremist? And what is that region going to look like with regards to the ongoing geopolitical risks, right? So the instability still remains. And that is going to affect your NASDAQ 100, your gold, your S&P 500, and that reaching record levels. But on that point, coming back to the inflation point, which you should always remember, when you are trading, please mark your next calendar dates for these three key inflation measures in the US economy, which is number one, your CPI data. We all know that, right? Number two, your PPI data, which is your producer price index data, which is inflation from the producer. And the third one, which at times traders are not mindful of, is the PCE data, which is the personal consumption expenditure index data. This is the US Fed's preferred measure of inflation. And usually it comes out towards the end of the month. Traders miss that one. And they wonder why there's so much volatility on the Friday or Thursday that it will come out, depending on when the month end is, because they're not keeping an eye on that. So please remember those three key inflation measures: your CPI, your PPI, and your PCE data. Especially going into the second quarter of second half of 2024, you need to be mindful of that data, as it's going to affect the interest rate path. And cryptos, if you're trading cryptos, they are also highly affected by that data. That's one of the correlations that traders have been looking for in as far as cryptos are concerned. And of course, your dollar index, the correlation of the dollar index to your price of gold. Whenever you're trading your instrument gold, have the chart of the dollar index there, because you'll see that inverse price action happening. When gold comes up, usually the dollar index is coming down. Why do I say usually? Because there are times when both of them are going up, right? Because interest rates are still elevated and there's geopolitics that is coming to the market, right? So that brings me to this last point, which is how the political events are going to shape the market movements, as I've mentioned. Now, what are we going to expect? As I mentioned, for South Africa, it's an election year. That's next week, the 29th, for some of you who don't remember to go out and vote, right? And what that government is going to look like is going to affect the price of the South African rand. How that government is going to be formed is going to affect the South African rand. An article has been written by Oxford Economics where they are talking about a possible coalition between the ruling party, ANC, and other smaller parties. If, for example, the ANC goes into coalition with the EFF, the market is already pricing a certain level of volatility. So prepare your trades for that. because that is certainly going to come through. If they choose a different party, again, that's going to come through in your South African rand. Is the geopolitics going to end going into second half of 2024? Highly unlikely. It's still very heightened, and there's very little, in the horizon that's suggesting that by the second half of 2024, the geopolitics is going to be gone. So what this means is the price of gold remains elevated. And you want to trade with the trend, which the trend at the moment is gold is going higher. What that means, moments of it coming lower could be opportunities to buy the dip and sell the bounce. Remember, as a trader, you are in the business of making money. And I always say, as a market analyst, as a market strategist, I'm in the business of getting it right so that you, the traders, can make the money. So make sure you trade with the trend, which currently at the moment is an uptrend. Keep an eye on the Bank of Japan. That's also another good proxy of the market sentiment. The Bank of Japan have been struggling with regards to whether they should increase interest rates or they should not increase interest rates. That gives you a good feel of the sentiment in the market. And that leads to the interest rate differential. What that means is, in the Eurozone, the Euro area, the ECB, is likely to start moving interest rates lower compared to the US. That interest rate difference between the Euro and the US dollar is going to be an important factor. The US will still keep on having higher interest rates, so that would suggest that the dollar is likely to remain stronger in comparison to the euro. So be mindful of that trade, especially on those days that the ECB announces. They've been giving guidance that they are likely going to start lowering interest rates, even if inflation is not yet at 2%, because it's going that way. The US elections in the second half of 2024 are going to take center stage. And that Trump card, I think everyone is surprised at the moment that Donald Trump is actually come back and is a front runner. And is that good for markets? Well, we saw what the markets did during his presidency. So those headlines, again, you need to be mindful of going into 2024, because it's going to cause quite a lot of volatility. And the resilience of the US job markets, NFP, US non-farm payroll days have been, I think, very difficult to call over the past year. But one thing that has been obvious now, or that has been highlighted, is that the jobs market in the US is starting to soften. So probably going into 2024, we are likely going to see a less resilient US jobs market. It's not slowed down completely, but it's starting to get softer. What that means is when you trade the NFP, you can start anticipating the direction in which that trade is going to go. Now, what will get you there for you to be successful this year? I think we all know this as traders: risk management and your strategies around safeguarding your trades. I think you've seen how much gold has been moving in a single day, way beyond the usual pips that it moves. So be a little bit more flexible with your stop losses, right? Be aware of your stop levels and your take profit levels, because the market, which is the next point, the price action is going to be very volatile. This year, there's a lot of factors compared to in the previous years that the price volatility is very heightened at the moment. And it is going to be important for you to keep an eye on sentiment. The US Tech 100, the S&P 500 also give you a gauge of where the market sentiment is. And keep an eye on the headlines, as I mentioned. keep an eye on the headlines. Know which headlines that you need to follow on any particular given day, which we've mentioned: the geopolitics in the Middle East, the European-Ukraine situation is still ongoing, although the market has priced that in well. But any new information that could come out of that Ukraine crisis would also affect markets. So keep an eye on that, on any of those headlines. And of course, if you trade oil, OPEC news has been hitting the markets very hard, especially around the days that they are going to be meeting. So, ladies and gentlemen, there's always a lot to talk about in financial markets, but the ticker is telling me I've got exactly 20 seconds or so to go. And I'm hoping this has been insightful. It's a very short time, but I hope these punch notes will help your trading business, help you have more insight into how to trade the rest of 2024. And from us, Exness, we wish you success in your trading business. And if you partner with Exness, you'll always be successful in your trading business. So thank you, everyone, for listening to me today. Thank you.